So guys, just to give you a heads up, I ran my numbers on the last quarterly report for IBM where they stated cash flow is going to come down a little bit. Full year guidance is going to come down a little bit. So I did that in my analysis. So my analysis is probably going to be a lot more accurate than some of the older stuff that's out there right now. Welcome back in YouTube. So as you can see, I am back in town, back to get ready to work here. And I'm starting to notice the sell-off in IBM. That's a stock that really has kind of been stagnant over the last few years. So we're going to get into IBM. What should we be paying for the stock? I know the dividend is nice, and most people are probably more reliant on the dividend than they are on the actual stock price. You probably get more of your dividend investors holding on to that strong high yield in IBM. But alongside of that, is there opportunity for this stock price to grow? Let's get into it. So what you have in front of you right now is IBM versus the Spider SPY. And up until this recent sell-off by IBM was up year to date 5%. Now that's not including dividends invested, as this thing pays over a 5% yield. So with dividends invested, it was probably 6.5 to 7% up year to date, which can't really say about a lot of stocks in the market. So as far as just stability and reliability for an investment, yes, it hasn't given you tons of returns, but in this type of market, that defensive type of stock, IBM has actually stood up very, very well in extreme volatility. And when we compare that to the S&P 500, the S&P 500 currently is down about 18% year to date. So until the recent sell-off, IBM was beating the S&P 500 by 20 to about 25% performance-wise. Fast forward to today with the recent sell-off after earnings, more like a 16-17 outperformance to the S&P 500. Still would be happy with that. I think most people watching this would be very happy with a double-digit outperformance on the S&P 500, considering how much the market overall has sold off. Now, IBM has been around since 1911, and we're going to breeze through a quick history of IBM because it's pretty fascinating. Problem with IBM as far as an investment goes, it's pretty much been dead money for an extended period of time here. You could pretty much go back to 2007 when it was about $100 a share, and fast forward to today and it's $128 a share. Over 14 years of kind of just not much growth, not steady growth. You have your ups and downs, but really when you factor in inflation, you're most likely down in the stock. Now, after dividends invested, you're probably closer to being even, but I just wanted to point out that over the last 14, 15 years, it's kind of just been a sideways movement, factoring inflation and also dividends being invested. Now, with that being said, there's no question that IBM has grown top line and is doing all the right things, just not enough for it to kind of push through on the stock price. Sometimes you can have a great company, but it just is not a good stock to own. And a big factor to that is definitely going to be the growth aspect. So when we go through the history of IBM, it's actually pretty fascinating here. They technically were incorporated in 1911 and started with computing, tabulating, recording company. And then fast forward to 1924, they became IBM, what we know them as for today, computing, tabulating, recording company, and it's renamed to IBM. Fast forward to 1944, IBM's first computer, the Mark I. This is what put them on the map. This is what made them innovative and at the time untouchable. They were way ahead of their time. As we can see right now, IBM is down 6.4%, and Yahoo Finance has this still overvalued by roughly 7% when a one-year target of 144. Have a little tick up in gross profit as total cost did come up pretty substantially here, a little over 10%. Seeing the debt go up here, accounts receivables fairly flat. They added a few shares to the market. They did beat top and bottom line, but I'm starting to see, okay, I'm starting to see a little reason why here that they could be selling off. To kind of recap what we're seeing here, guys. So when you look at the top line growth, you're thinking, okay, they grew almost 10%, but gross profit only came in right around 5%, right? Gross profit came in right around 5%. Then they added some more shares to the market, and their debt has gone up. When you factor all that in here, it's kind of a net loss for the company here. So I'm starting to see that, okay, overall it was an okay quarter, but when you factor in everything else, it was kind of a flat quarter here. When you factor in that there was some dilution added here, they took on a little bit more debt. And it doesn't equate to what their gross profit was. So right off the bat, guys, I'm starting to see some issues here with IBM. So oddly enough, Yahoo Finance has them growing roughly double digits. Now, I think this is a little crazy, considering that the last 5 years their average growth has been in kind of flat to negative. So yeah, I don't know if I feel quite comfortable giving them that kind of growth rate. So we're going to look at stock analysis and kind of see what they project for them as well. So with stock analysis, they have them with 13% upside, a price target of 146. Yahoo Finance, on the other hand, has them roughly about 7% overvalued. So you're starting to see the disparity. But the good thing is you can meet in the middle somewhere and give yourself kind of a fair judgment on the stock. So I actually like a little bit of a disparity here. We got a price target as low as 116 and as high as 174. And their growth rates are very moderate on here, as we have a 7, a 3, a 4, a 2, a 3. I tend to lean towards these type of growth rates for IBM personally, guys. Okay, guys, so their final quarter, they did 14.2 billion, and if we factor that consistently coming out for the rest of the year, 14.2 billion times 4 quarters comes right out to 56.8 billion. Now, in stock analysis, they're projecting them to do 61.6 billion. I don't feel comfortable with that. I think 58 to 59 makes a lot of sense, okay? So I'm gonna give myself a few $1 billion here, as they're on pace to do 56.8, and I could see them maybe doing 57, 58. So I'm okay giving a little bit of an uptick here, but not that much, to be quite honest with you. I don't think 61.6 is appropriate. The EBITDA margins have consistently been in the 20% range. Just to give you guys a heads up, when we look at what kind of multiple we should be putting on IBM for EV to EBITDA, IBM currently trades at a 14.2. The sector median is a 13.5. We're going to be conservative and use a 13 times multiple here for a few reasons. IBM is in a contraction period. Free cash flow is going to be coming down. Revenue could be impacted by the end of this year. So with that being said, I'm going to put a lower multiple on it to build some protection in there for us as well as an investor. So instead of a 14.2 or a 13.5, I'm going to use a 13 multiplier for EV to EBITDA for IBM. What I'm using for growth for IBM, from 1 to 3 years, we're going to use 4% revenue growth. They've kind of been flat to down, so 4% I think is pretty generous. From 3 to 6, we're going to consistently use that 4% revenue growth. From 6 to 10, guys, I'm using 3% revenue growth. So I'm basically saying IBM is just going to do enough to stay above that 2.5% inflation rate, which we all know it's over 2.5%, but hopefully inflation gets under control over the next few years. Now, anything above and beyond of this, can absolutely explode this stock price. So what I'm doing right now is building a ton of safety within this analysis. Margins, guys, have come down. Their gross margins are roughly coming down from 55 down to 53%. Now, overall, their EBITDA margins is between 23 to 24%. So what I'm actually going to do is I'm going to bump this up. I'm going to say from year 1 through 3, it's at 20%, which it means it's coming down a little bit. From 3 to 6, it goes to 21%. And then from 6 to 10, we'll get them back up to 23% EBITDA margins, okay? I think this is a fair analysis. Talk about the pros and cons really quick. The pros are the company has a tremendous amount of free cash flow. They're going to have free cash flow. I have them projecting free cash flow of $9.5 billion. Now, the street is projecting them cash flowing $10 billion. But as I stated, there's definitely some concerns with what's going on with IBM internally, and I want to err on caution, so I'm using 9.5% free cash flow. Shares outstanding have grown a little bit, nothing to be alarmed, nothing alarming, but they have grown a little bit. So I'm using about a 1% share dilution year over year for IBM. Another con, guys, this debt is pretty high, okay? When we factor in short-term and long-term debt, we're looking right around $54 billion in debt with $9 billion of free cash, with $9 billion of free cash flow and roughly $9 billion of cash on the balance sheet. Now, with that being said, this is getting to a higher leverage point when we talk about liquidity versus debt here. Okay, so it's getting to an interesting point where it's not scary quite yet, but definitely something you want to keep an eye on here, guys. Okay, I don't think it's outrageous, but if it gets above 60, I would probably be a little bit more concerned with IBM at this point. So they do have a little bit more room from the debt side. Gross margins are strong compared to sector median. EBITDA margins are strong compared to sector median, pushing almost 21%. As you saw in our analysis, we're using 20, bumping it up to 21 and 23 from 6 through 10. Guys, the dividend yield is pretty much why people buy the stock. 4.7% dividend yield. Obviously, on any dip, you can be pushing a 5% yield with IBM. Very strong dividend yield. Dividend safety is getting a little scary here as the payout ratio is pretty elevated. Okay, something we want to keep an eye on here. Got to grow that free cash flow. And as we saw, free cash flow could be coming down here. 23 years of consecutive dividend growth. They're upping that dividend for you as the investor and returning capital to the investor. So that is awesome to see. And guys, it doesn't get any better than 32 years of dividend payments consecutively dished out. This is a big reason why IBM does trade for somewhat of a premium here. So the fact that I'm putting a 13 times multiplier on the stock might not get to those levels because of how safe this cash flow from this company has been over the last 30 years. I run the analysis on IBM, okay, using basically a 4% growth over the next 5 to 6 years and then 3% growth over that. We get them to doing roughly just shy of $80 billion in revenue by 2030, okay? So, and I think this is about realistic. From having 900 million shares outstanding to just under 1 billion shares outstanding, I think that is realistic as well. There's a couple different ways I want to break this down. From a DCF model, IBM is worth about $124 a share, which means that today, right now, where it's trading at 128, I can absolutely see it being a buy at these levels. With that being said, I like to build a little bit of a buffer in there of roughly 10%. So me personally, I'd be looking at a 111 to 112 type of purchase point for IBM. Now, if I want a double-digit rate of return, I'm looking at trying to enter IBM around $82 a share. Running this model, I believe in 2030, IBM should be sitting right around $193 a share. Now, what we're not talking about here, ladies and gentlemen, is the next 7 years are doubling your money investing in IBM if you're buying it under $100 essentially. But we also have to factor in that a 4 to 5% dividend year over year is going to compound even more. So with that being said, IBM in this $111 to $80 price target makes a ton of sense with this hefty dividend being reinvested. So guys, I hope you enjoyed my dive into IBM. Very, very strong company. Absolutely could trade for a premium. And I'm gonna put a 14 times multiplier in there just to see where it could be in 2030 and where you could be paying for today. So in 2030 could absolutely be a $211 stock. and a $90 price target seems about right, which still falls in line with that $111 to $82 price target I have in there. So I would average that out to basically IBM is a very strong buy, guys, in that $90 range. As always, guys, appreciate your time. Thank you so much for spending it with me, and we will see you next time, investors. Peace.